When it comes to land contracts, this is one of the most commonly misunderstood financing concepts or financing principles in the real estate market in the United States. And frankly, I would have to say this is as misunderstood by real estate professionals as anybody. And for this reason, I went and took the liberty of digging in and doing a deep study on this concept so that I could learn more and that I could write an article to benefit anybody who is considering a land contract or just wanting to learn more about it, which I will link in the description of this video. And this video is just a good general breakdown of what I found in that study, and this is sort of a condensed version of the article that you can find on my website. So something that I learned is that land contracts are actually a lot more common than I even thought, and actually over 8 million people in the United States has used a land contract to purchase a home or to purchase property. And as a matter of fact, right now, there are over 1.4 million people in the United States who are currently under a land contract to purchase their house or property. Another thing that I found interesting is that of houses or properties in the United States that are under $150,000 in value, only 26% of them are using a conventional mortgage to purchase that. That means that almost 3/4 of the time, if the price is under $150,000, you need to use some sort of different type of financing other than a conventional mortgage, which now obviously most of them aren't using a land contract. A lot of them are using other mortgage products like FHA or rural development or those type of things. But still, I found this very interesting. So let's start by defining exactly what a land contract is. So a land contract is essentially a financial agreement or an agreement to repay that's directly between the buyer and the seller. So there's no bank or mortgage lender involved when it comes to a land contract. So once the buyer and the seller actually agree to the land contract terms and engage and enter into the land contract agreement, then the buyer is able to move into the property and occupy it the same as if they were to purchase it with any other mortgage. Now, the main difference is that in this scenario, the seller retains the deed and retains ownership of the property, and it's held as a security to make sure that the buyer performs to the terms of the land contract. The buyer then makes direct payments directly to the seller until the final payment, which is generally a balloon payment in which the seller will then convey the full ownership interest over to the buyer. Now, while the buyer is in this land contract agreement with the seller, they do have an ownership interest. They just don't have a full, what we call fee simple ownership of the property the way that they would if they had a traditional mortgage on the property. But to the courts, they are still recognized as having an ownership interest in the property because purchasing a house with a land contract is a purchase. Now, some people call land contracts different things. Sometimes it's called a contract for deed or a bond for deed, an installment land contract, or an agreement for deed. But for all intents and purposes of my article and for this video, I'm always just going to refer to it as a land contract, but just know that any of those terms, we're talking about the same thing. So here's kind of how a land contract works. Essentially, the land contract is between the buyer and seller directly. So there is no external lender involved, which means that you can negotiate any terms of the actual mortgage mechanism, just like you can negotiate any terms of the real estate transaction. So the buyer and the seller would negotiate terms, and then you would draft and sign the contract. Now, there's a lot of different ways to do this, but I highly advise that you employ a real estate attorney or at least a real estate professional, but ideally a real estate attorney to draft this document so that you make sure that there's no holes or ambiguity in the contract language. The next is generally there's going to be a down payment, and in many cases it's fairly sizable because the seller is taking on a lot of risk by entering into a land contract. So usually they're going to want a fair amount of skin in the game from the buyer. So usually there's a down payment anywhere from 5, 10 to 20% of the purchase price in order for you to engage in the land contract. And then, of course, once everybody agrees to the terms of the land contract, and the buyer is permitted to move right into the house and occupy the property the same as they would if they bought it with any other traditional mortgage payment. The next thing is that the buyer is then sort of like renting, but definitely not the same as renting, but the buyer will then make direct payments to the seller because the seller is the creditor. The seller is the person or the entity that is extending a line of credit. So the buyer would then make their payments directly to the seller during a land contract term. The next thing is that you want to make sure that if you enter into a land contract that you are recording that land contract, because if you don't record the land contract with the Register of Deeds and with the county or municipality wherever you live, then if there's ever a dispute that arises regarding the land contract or any terms of the land contract, you're sort of not going to have a pot to piss in. You want to make sure that once everybody agrees to the land contract, everybody signs the land contract, then the land contract is recorded with the Register of Deeds, which is still going to retain the deed and ownership interest of the seller, but it's also going to recognize the buyer as a interested party and somebody who has an ownership interest. And then the last thing is that most often there's going to be a term, generally a stipulated period of time or a general amount of payments that are going to be due. And then on the final payment, then the deed and the full ownership is going to be handed over to the buyer. Now, in most cases, what actually happens is there's a balloon. So let's say that you're purchasing a house for $200,000 on a land contract with a 5-year term. So that means that you're going to essentially have 60 payments, monthly payments, and then the final payment is going to be the full balance due at the end. And so let's say that during the 5 years you pay off $10,000 of the land contract, you're going to still owe $190,000 at the end. So, and that's going to all be due in one payment. And what most people do in this scenario is go ahead and take out a traditional mortgage product like a conventional mortgage or an FHA mortgage and essentially refinance into that. But it's very important that you have a strategy of how you're going to make that final payment, unless you're just going to pay the full amount, which of course is going to come at a much, much higher monthly payment during that short land contract term. Most sellers are not going to want to engage in a 30-year land contract the way that you would with a traditional mortgage, because that's a very, very long-term commitment for the seller to make, which obviously they incur a ton of risk if that happens. So that's the general sort of structure that you're going to expect with most land contracts. And again, in my article, I break all this down in extreme detail if you want to learn more about this. So I want to also help you guys understand the difference or the main differences between a land contract and a traditional mortgage, because they both are mortgages. They're both mortgage mechanisms, but they're very, very different. So with a land contract, the legal title stays with the seller, but when you purchase a house with a conventional mortgage or any other type of traditional mortgage financing, the buyer is going to get the deeded ownership at the closing table at the time that they actually make that purchase. The second thing is that with a land contract, again, the seller is the creditor. So they are the person who is essentially extending the financing, where, of course, when you take out a traditional mortgage, the bank or the bank institution is going to be the person who's providing the financing. Default remedy, and this is very important to understand because, of course, you can default on a land contract the same as you can default on any other mortgage. Now, this is where, if you're a seller and you're watching this can be muddy, because there is no real federal guidelines as it relates to forfeiture or repossession of a land contract. It's going to depend on where you live and what the policy is where you live, or how you build the contract language, which again is why that you need at very least a real estate professional, but ideally a real estate attorney to build out these terms to make sure that they're very black and white and that everybody understands. And then, of course, with a traditional mortgage, the standard federal guideline is a foreclosure proceeding or policy to actually repossess, but they're very different, and it's important to understand that. Again, my article goes deep into this. Federal protections, like I just talked about, they're very limited with land contracts because there's really no integrated policy at the federal level that stipulates how these land contracts need to be handled, especially when there are disputes involved where when you're talking about traditional mortgage financing, this is all very, very standard in public policy at the federal, state, public, or city guideline. These are very straightforward, and most people can sort of know what the program is. Recording the deed at closing. You want to make sure that with a land contract, you are recording that deed at closing because you don't have to. Where when you purchase a house with a traditional mortgage, it is automatically done for you. A lender makes sure that that's part of the process. So you need to make sure that you are taking control of making sure that the deed is recorded at closing. And then when it comes to title insurance, this is the other thing where a traditional finance mortgage is always going to require title insurance, meaning that the seller purchases an insurance policy on behalf of all interested future parties like the lender and the buyer to make sure that the title is unencumbered, which is just a fancy word of saying that there's no way that somebody can come in the future and say, no, I own that house. I have an ownership interest in this property. That person never had any right to sell it. With a traditional financing, this is always going to be in place, where again, this is something that you're going to need to know about if you're entering into a land contract, because there are no federal guidelines. There are no requirements for title insurance at the time of closing. And as a matter of fact, it's quite complicated and hard to get. So these are just things that you need to know about if you're considering purchasing a house on a land contract, or definitely if you're considering selling a house on a land contract. So now I'm going to break it sort of down into what you need to understand if you're a buyer and what you need to understand if you're a seller. So buyers, these are the things that you need to know about. The main benefits if you are a buyer are the accessibility. So a lot of the time, a land contract mechanism is going to make it possible for somebody who either doesn't qualify for traditional financing or has some sort of unique or strange income, or that's going to limit them from being able to purchase a house with a traditional mortgage. It's going to make this process more accessible. The second thing is that a land contract is very similar to cash in the way that it closes. You don't have all of the federal guidelines and mortgage practice standards in place, including underwriting and appraisal and all these different things that go into traditional financing. You're not going to have that with a land contract. So land contracts can be very, very quick. I mean, you can enter into a land contract on a Monday afternoon and you could be closing on it Wednesday or Tuesday. Depends on your title company and a lot of other things, but it's very, very quick in comparison to traditional financing. The other thing is flexible terms. Mortgage lenders, traditional mortgage lenders, they don't really negotiate terms. They're very, very rigid in the way that they do things, where with a land contract, everything's negotiable. Everything with the purchase agreement is negotiable, and everything with the mortgage mechanism is also negotiable. So it's a way that you can enter into a purchase and actually have very flexible terms of the agreement. And then the last thing is bridge financing. So basically, if you're 5 years away from needing to repair your credit, or different things, liquidating assets in your life or what have you, a land contract, a 3 to 5 year land contract, can be a really good way to bridge that gap and sort of allow you an opportunity to purchase a house or a property, but use that next couple of years to actually get yourself in a position where you can enter into a more traditional long-term financing option. So those are the main benefits that I see if you're a buyer considering a land contract. Now, on the flip side of the coin, there are a lot of inherent risks for buyers and for sellers. But for buyers, one of the big risks are the fact that if you end up defaulting on the land contract, it is very possible, and matter of fact, probable, that you are going to forfeit not only your down payment, but also every payment that you made during the land contract. So if you get foreclosed on, it's kind of like a traditional mortgage, where if you get foreclosed on and repossessed, they're not going to return to you all the payments that you made and your down payment. So there's a lot of risk, especially if you have a large down payment with a land contract, if you default on it. So make sure that you always have a strategy. The second thing is a lot of mortgages, if the seller is selling you a property on a land contract that they have a mortgage on, a lot of mortgage lenders are going to have what's called a due on sale clause, meaning that they can't sell it to somebody else while they have that mortgage. So as soon as the lender finds out that they have sold the property on a land contract, they can make their mortgage due on sale. That means that if they're not able to pay off their entire mortgage all at once, they could be repossessed. They could be foreclosed on. If they get foreclosed on and they had a first mortgage on that property, then you are going to lose the property when they lose the property, and you're going to lose everything that you have into it. So it's very, very important that you make sure, if you are entering into a land contract with a seller, that you know, for one, if they have a mortgage, and two, if they do have a mortgage, you want to make sure whether or not they do or don't have a due on sale clause that's associated with that mortgage. Next is the title insurance part of it. Most land contracts do not have title insurance on the property. So again, there is risk that, Uncle John from 1978 is saying that Grandma Gertrude left him this house in her will or something like that. And then you are going to be being put at risk, if that's true, to potentially losing the house and everything that you have into it. So that's another big risk when you enter into a land contract. And then the last thing is the balloon trap. Now, there are a lot of sellers, investors, that their strategy is to purchase houses, then remodel them, and then sell them on a land contract to sub-qualified buyers, or buyers who have a high likelihood of defaulting on the mortgage. They sell them knowing that it's more than likely that they are going to default on the land contract, and then they get to keep the down payment, they get to keep all their payments, they get to repossess the house, and then sell it to somebody else under the same terms. These are predatory investors, in my opinion, but I know a lot of real estate investors that this is their main strategy. So you want to make sure that you have a firm, ironclad strategy to pay that balloon payment at the end of the land contract terms, so that you don't find yourself getting trapped in that balloon payment trap and getting trapped by one of those predatory sellers. Now, on to the seller's guide. Of course, there are always benefits and drawbacks, and that's no exception, just like with the buyers. So let's break down some of the benefits and the drawbacks of being a seller if you're considering a land contract. So some of the main benefits of selling a house on a land contract. The first one is the tax deferral. So basically, the way that capital gains are taxed, at least anywhere that I know of, and everything that I found in my studies, is basically those capital gains are taxed as you get them. So if you were to sell a house, let's say for $200,000, and let's say that you made $100,000 profit on that house, and you just sold it to somebody, now you have $100,000 bill that you have to pay capital gains on all at once. Where if you sell the property on a land contract and you're receiving that equity in smaller portions, you are only going to have to pay those capital gain taxes as you receive those gains. So it kind of makes it nice. It spreads out those capital gains over a longer period of time. The next thing is of course, this gives you a bigger buyer pool. So when you you are considering selling a house, let's say that you want to sell a property and you're willing to sell it to anybody with traditional financing or sell it on a land contract, it is going to open up the door for you to appeal to more buyers. Now, I will say that these additional buyers are generally going to be lesser qualified buyers, in most cases, not always, but just something to consider. Yes, you are opening up the buyer pool, but you're not opening up the buyer pool to tons of more qualified buyers. The next thing is that this is good for sellers who prefer monthly income over one lump payment. If you sell that property in one lump payment, let's say that you had $100,000 of equity, not only are you going to pay capital gains taxes on that equity, but also now you're sitting on a $100,000 bill that is going to diminish over time due to inflation. So some people prefer to, instead of doing that, sort of gain that equity over a long period of time. It gives you predictable income if you're a retired person or something like that. So a lot of people see this as a benefit. And then the last thing is that in comparison to selling a house on a land contract to somebody or to retaining that house and leasing it to somebody, you have some more securities and sort of less responsibilities. So a lot of sellers see a lot of value to that as well. So then what happens in a land contract if the buyer or seller defaults on the land contract? So the first thing, and this is a general sequence, and again, everything is negotiable. So it very, very much is going to vary from one transaction to another, but this is the general sequence that you can expect. So the first thing is that there has to be some sort of default, which usually is sort of written out in the land contract of what constitutes a default. Once there is a default, then the seller is generally going to give a written notice to the courts and to all parties that there is a default, and the amount that is owed in order to remedy that potential default. Then, once they've delivered that written notice, usually you're going to have a cure period or a period of time where the buyer is going to have an opportunity to get back up to date on payments or what have you. Again, completely negotiable, but what's normal is a month to a couple of months for them to get back on track and to reinstate the terms of the land contract. The last thing would be the outcome. Now, again, depending on what state you live in, depending on the guidelines of where you live in or what you put in the land contract, you're generally going to have one of two things. You're going to have a forfeiture, or you're going to have a foreclosure proceeding, and they're very different. A forfeiture is just straight up, you're taking the house back. It's very quick, it's very painful, and it's very abrupt and harsh. The second thing is a foreclosure. So if you're a buyer, you want to have some sort of foreclosure proceeding happen. They take much longer time, and there's a more long and thought out process to a foreclosure proceeding. Now, where I live in Michigan, you can see that we have a sort of rigid law that even includes guidelines for how much equity that a buyer has in the property, rather than just taking it at face value without considering, how deep into the land contract that they are. So again, it's going to vary if you live in Nebraska or if you live in Florida or somewhere else. What's important, and again, hire a real estate attorney, but what's important is to understand what that could potentially look like before you enter into a land contract. So some red flags that I would always advise that you don't sign a land contract if any of these things are occurring. The first one is if a seller refuses to allow for any kind of title search or anything like that. If the seller is really skittish about that, this is a major red flag. I would not do this deal. The second one is any seller who refuses to agree to record the deed at the time of closing or immediately after the time of closing. This is a red flag, more than likely a predatory seller. I would not do this deal as well. I would not do any real estate deal involving a land contract if I didn't have a firm and iron, rock solid plan strategy to be able to pay that balloon payment at the end of the land contract. If you're just entering into the land contract hoping it will work out at the end, this is a major recipe for disaster. I would not do any real estate deal where the property is being advertised as sold as is, but will not allow for an inspection. Again, this just has disaster written all over it. This would be a major red flag, but a lot of the time you see these with land contract deals. I would not do a deal if the seller has a history of selling the same property over and over to buyers who are defaulting. This is what we talked about earlier. This is a predatory investor strategy. These are not the type of sellers that you want to buy a land contract from, because you already know what their end game that they want is. So these are not going to be people that are going to work with you. These are going to be people that are setting you up to default on the land contract. This is not a deal that you want to do. And then lastly, any seller that cannot or won't disclose whether or not they have a mortgage on the property, or if they do disclose that they have a mortgage, cannot or won't disclose whether or not they have a due on sale clause, because as you know, this can be a source of major heartache if this goes sideways on you. So these are just a few red flags you want to make sure that you're looking out for if you're considering entering into a land contract. Buyers and sellers, you want to make sure that you protect yourself. Again, these are things that we've talked about already. If you're a buyer, make sure that you hire a real estate attorney. Do the same thing if you're a seller. Always make sure there's a real estate attorney or at least a real estate professional involved. The next one is to pay, and it's not very much, but pay your local title company to do a title search on the property prior to signing the land contract and finalizing the land contract. Next is to make sure that you record immediately with the Register of Deeds that land contract. This protects both the buyer and the seller, but if you're a buyer, you want to make sure that this is done just in case a dispute arises. Also, whether you're buying a house with a land contract or whether you're buying a house with a traditional mortgage, get an inspection. Unless you're a very savvy, experienced buyer, make sure that you have the house inspected, even if it's for informational purposes only. You want to make sure that you understand the ins and the outs and what you're getting into. And then lastly is, again, have a concrete balloon payment strategy. Make sure that you know how that's going to work. Sellers, again, hire an attorney. Make sure that you hire an attorney, but also talk with your CPA, your tax accountant, to discuss what you're going to be doing and what you need to know as it relates to your taxation. This is going to be a phone call, very, very well spent time on the phone with your tax professional. Make sure that you know everything that you need to know as far as that goes. Also, make sure that you know the regulatory guidelines as it relates to how many properties you are allowed to sell on a land contract, because there are a lot of federal guidelines as it relates to that. You can't just sell unlimited houses on a land contract without having to adhere to the standard mortgage practices that are put in place. So you want to make sure that you know about that. Next, record the land contract, just like the buyer. This is going to protect you as well. You want to make sure that if a dispute arises, that everything is tight and right. So make sure that the land contract is recorded with the Register of Deeds. Also, verify and document all of the buyer's payments. You want to have a good, very firm record of all of the buyer's payment, again, in case you have to go into a foreclosure or forfeiture proceedings. You want to make sure that everything is in place and it's not just your word against theirs. And then also make sure anything that you do, that you are not defaulting on any mortgage that you have on the property, because this is going to be bad news for everybody. So make sure that throughout the entire life of the land contract, if you have a mortgage on that property, make sure that you are making all of the payments on time and in full. So at the end of the day, when does this make sense? If you're a buyer or if you're a seller? Well, if you're a buyer, a land contract might make sense if you have good verified income and you have a realistic path to repairing your credit. Maybe if you have a subpar credit, and make sure that you have a good strategy for your balloon payment. It also is a good strategy for houses that are at the lower price ranges, because these are mortgages that are generally a little harder to get. So in a lot of cases, a land contract might be a good situation for some something like that. Also, if I sold a land contract in an area, very remote area of the Upper Peninsula of Michigan a few years ago. It's a rural area it's just sort of hard to find comparable sales and all these different things that go into financing. So in a lot of cases, if you're in a really rural or remote area that's sort of hard to get traditional financing, might be a good option for you. And then lastly, a lot of people buy houses on land contracts from family members. So, mom or dad own a house and want to sell it to one of their kids. It's a great way for their kid to step into actual ownership without having to go through a mortgage process, but also, have a little bit of control over the terms. Aunts, uncles, grandmas, grandpas, people do this all the time, intra-family. So that's another scenario in which it might be a good idea. For sellers, if a low tax basis or something like that is important to you, this might be a better option for you because again your gains will be taxed in that way. Also, if you're in or near retirement and you prefer to receive steady monthly payments over time rather than a lump sum of cash, this might be something that you might consider doing. Or a lot of people will inherit a property from a family member who passes away or something like that, and they just want to sell it as fast as they can, and they don't want to rehab it and they don't want to get it ready. This, might be another scenario if you're a seller that this might make sense to you. And then again, if you're in a really rural area or low cost area that it's harder to find buyers, you might consider selling it on a land contract and it might be a good option for you. At the end of the day, there's no right or wrong answers. It's just like anything else. And again, this is an overview of a deep dive article that I wrote that's on my website if you want to learn more about land contracts. But at the end of the day, it's just about understanding and knowing what the process looks like, what your options are, what your potential benefits and drawbacks are. There's no right or wrong answers. For me personally, there's very few scenarios in which I would think that purchasing a house or a property on a land contract is a better scenario if I'm able to purchase a house with a traditional mortgage. But again, it's just an option. So if you like this video, please give it a like and a share. And as always, thanks for watching.